risk management, not really much on analyzing. So, uh, risk management is what we have to talk about today. Mr. Risk management. Yeah, risk management. So, how much is so how much is your capital? Let's start with you.
Okay.
Let's look at risk management. Let's say how much is your trading capital currently?
My balance currently is 387.
Okay, 387.
Yeah.
So how much was the initial?
Deposit
Yeah.
was 200, and
Okay,
they gave me
387.
credits of 100.
$100.
Yeah.
Yeah,
Everything
387.
in euros.
So now, yeah, anytime you have, it's just like trading. I say, take trading as a business. You
Yeah.
understand? It's a business. So say now you invested in your business, this business $200, or yeah, this is your starting capital for this business. So the first you have to tell yourself is, this business, I'm meant to make profits, but I know the profit does not come immediately.
Yeah.
You understand? The profit is just like every other business. You don't start seeing profit. It's only in trading people do that. I will see profit immediately. Like you guys now, you started seeing profit just 1 week of starting your trading business. You understand? It's only in trading. It's only Forex that can give you that. Like that. But on your normal day-to-day business, you can't see that profit. You understand? You have to work. You have to take time. Grow your brand, grow your customers, and all that. Your stages, go through all the stages of business before you start seeing profits. You understand? So, but in Forex now, because of that, Forex, like I say, Forex is like a house full of gold and snakes. You understand? So everybody just feels it's free money. You understand? But without keeping in mind that, you can actually lose everything.
Yeah.
You can actually get burned. So the only thing that can protect you in trading is risk management, which is the key as a Forex trader. I don't know if you guys have watched that Habit Forex video dropped recently. Yesterday or day before yesterday. Did you guys watch it?
No.
Okay, go to his YouTube, you watch it, you find it there. So risk management is the only thing that will protect you in Forex trading. Yeah. How do you go about your risk management? It has to do with your lot size. You understand? The lot size you use and your pips. I've said this. There are three types of lot size, right? You understand? There are three types of lot size. Am I correct?
Yes, there's
We have the standard, we have the micro, and we have the mini lots, right? The standard, the micro lot. Yeah. Standard is a whole number. Mini lot is that lot size that comes after the decimal point. While the micro lot is the smallest lot size that I can use. Am I right?
Yeah.
See, one standard lot, one lot, standard. Wait, let me copy this from my notepad. I think I have it somewhere on my notes. Yeah, look at it. Standard.
Standard, mini, and micro.
Standard, mini, and micro, right? So we have standard lots. Yeah, we have mini lots. We have mini, we have standard, we have mini, and we have micro, which is the smallest. You understand? So for you to know these two lots, just say standard is a whole number. You understand? Just take standard lot as a whole number. Then mini, it comes after the decimal points. Then micro is the smallest lot size possible. You understand? Micro is the smallest lot size possible. This trade is reversing. I think you guys might get an entry soon on this trade. But let's see. So standard is any lot size that your one whole lot. Mini is the lot size before. Mini is the lot size after your decimal point. So for standard lots now, you're always risking $10 per price movement. That is per pips. You understand? You're always risking $10 per price movement for one standard lot. We use one standard lot as basis. So for mini lot, you are losing $1 So yesterday you used a mini lot for that trade. You know, the lot size you use, start off, use the mini lot.
Yeah,
So
0.5.
fine, yes. But if you use a micro lot, that's why you made the money in $2, in
Yeah,
$3. You use the mini lot. That's why you're able to make how much? $90, have you? 95. $90. So how many pips is that?
With $90.
Dollars for 0.5. How many pips is that? How many pips do you think that is? So you
9.
say one mini lot will give you $1 per pip, right?
Yeah.
So 5 mini lots should give you what?
Would give me $5.
Per pip here. So now you have $90. So how many pips is that?
19. If it's
19.
5 that I made, if it's 95 that I made, I think it's 95, then it's 19 pips.
19 pips, right?
Yes.
Good. So if that is correct, you made 19, almost like you made 19 pips. Yes, sir. So 19 pips was what you made, right? Or your 0.5. That is you made almost 20. It's almost similar to 20 pips.
Almost
Yes,
20.
sir. So
Yes.
almost 20 pips. That means 20 pips, you have made $100 on that account. Yes, sir. So that is just how to, once you know the basics, the rest is just mass. You understand? You just know how to just do the calculation. You understand? So now if you have an account of $300, that money you made now is over 50, almost 50% of your account. I mean,
Yes.
it's almost 50% of your account. Though it's a quick money, it's scalping, you understand? It's
Yeah.
scalping. But it's still not a good risk to reward. You understand? That was not a good risk to reward. I just say we should risk it yesterday. You understand?
Yeah.
Though I was looking I already knew my stop loss was 10 pips. The stop loss was no more than 10 pips in my
Okay.
head. So I've calculated it already. Yes, sir. But 20 pips was okay. It's just 1 to 2. That's not a good risk to reward because in 1 to 2 trade, you understand? If you lose 2 times, you've lost the profits.
Yeah.
You understand? If you lose 2 times, you've lost the profits. So you have to make a trade that at least if you have 3 losing trades, you can make it back. It will still cover your profit, your capital is still there. You understand? That's the way you have to be thinking when trading. 1 to 3 is okay. 1 to 2 is not bad, but it's not the best.
Not the best.
You understand? 1 to 2 is okay, it's not bad, but it's not the best. So you have to always risk willing to make ×3 of what you are willing to lose in trading. You understand? Another thing you have to understand is percentage. How many percent are you willing to risk on that account? So you have to think about the percentage of what you are willing to lose on that account. So for we now, I always advise don't risk more than 10 to 20% max. And that is if you are greedy, if you know okay, you want to take risk. 20% on your standard trading account. Don't risk more than 20%. But the standard risk management is 10%. Because when you reach 10%, you have to lose 10 times before you blow your account. You understand? And you know that if you lose 10 times in a row, you don't really know what you're doing. You are doing something wrong. Do you get the math?
So basically never risk more than 20% of your balance.
So just tell yourself that you're not willing to risk. This is your $307. You're not willing to risk more than $40.
Yeah.
You start on that trade. So what is your lot size? Because you know that your stop loss is always like 20 pips.
Yeah.
What will be your lot size?
Hmm.
Can you think? If you're using 20 pips, what will be your lot size? You know, sure you're losing only $40.
I think 0.04.
No. 20 pips. Your stop loss is 20 pips usually. I usually risk more than 20 pips on a trade
Yeah.
when we are trading.
If I set my stop loss 20
Pips, yeah.
need to lose more than
$40 for 20 pips. How many lots? So think about it. Standard lots, $10. Definitely standard lots per pip is $10. Definitely you can't use a standard lot. You understand? So your next option will be mini lots. 0.1 mini lots is $1 per pip. So 20 pips will be what? $20.
0.2.
20 pips will not be what?
And now 0.2, so I would only lose $40. That's my risk, my maximum risk. Abi?
Exactly. Do you get the math now?
Okay. I just saw something here that my broker allows me to risk, and based on the risk, it will adjust my lot size.
Once you put your percentage there on your calculation, your percentage, your broker will tell you the specific lot size is. Like we have for that too. You also have a website for it, FX calculator.
Well, if I take a 20% risk, that is $76. My God. Even if I want to do a stop loss of 20 pips, $76. Okay, I see. So I can only risk 10% of my account.
Exactly.
God damn, that's manageable. 10%. And that's not bad. I don't.
So now let's say your account, you put in your account size here. You have 387. Let's say you want to reach 10%. Your stop loss 20. Calculate for you. You see now, it has given you the lot size to use. 0.19. This is the lot size they have to use. Yes, sir. So this now will tell you exactly. The thing you just need to know how much you are willing to risk, how many pips is your stop loss. But believe me, we are not using more than 20 pips. So you should not always use more than 20 pips when analyzing your trades, right? So you only just need to do, if you are confused, if you don't know how to do the math, yes, now just come to this position size calculator and calculate it. Put your account balance, put the percentage, then put the stop loss. The important thing is you need to know the stop loss pip. That is the important thing. How many pips you are losing? You need to know the stop loss. You understand? Are we clear?
Yeah. Okay. That's proper risk management, meaning like I would never risk more than this. And the chances of me, right, in maybe 3 trades, right, it still be very I think you said like once we notice that first trade went wrong, second trade went wrong, something wrong, so it's time to pull back.
Yes, it's time to pull back. You know you are doing something wrong.
Yeah, so with this strategy, it just means that even if I lose 80, at least the account will not blow.
Exactly.
Okay, I see.
You understand now? Easy, right? So this is how to follow risk management. This is just risk management for you. So you must not risk more than like 10, 15, 20%. So now again, how do you make more in Forex trading? Is your loss, your stop loss. So now if you get a stop loss of 10 pips, that tells you that you can increase your lot size. You understand? If you get a stop loss of 10 pips, because usually your stop loss is 20 pips, but now you've seen a stop loss of 10 pips. That tells you something, right? That tells you that, okay, since my stop loss is 10 pips, I'm risking lesser stop loss, but that means I can increase my loss size. You cannot increase, if your stop loss is 10 pips, if you calculate now, you see that it will increase your loss size for you, 0.3. 0.39. Have you seen?
So all of a sudden, my lot size will increase because the stop
Because
loss.
you're using a lesser stop loss.
Mm.
Do you get the mass?
So in order to maximize profits, right?
Yeah.
It also makes
Yeah.
sense that if I'm maximizing profits, I can take a larger lot size.
Yes.
Even if my stop loss is small, this
Yes.
is basically still the same 10% of my accounts.
Yes.
Just
You're
that
still using the same 10%.
I'm using the same 10%. It's just
Yes.
the size is larger now.
Yes.
Okay.
You understand? So this helps you make more money. Yes, sir. That is why I like to look for 10 pips trade most times.
Sharp. Quick entry.
You make more money that way.
Okay.
You guys understand now. So this is how this is just risk management. It's not. First of all, know how many pips you are using for your stop loss. That is, if you are the one, I know there's definitely a way. There's definitely a way to know that, right? You guys know. You can use the long position to use the long position to or use the short position to. You understand? So you know where you're putting your stop loss. And like I told you, if you are taking a buy, your stop loss is always below what? Your support.
Yeah.
You understand? It's always below your support. If you are taking a sell, your stop loss is always above your what? Resistance. Are we together?
Yeah.
I mean, you understand? So just now, calculate how many pips from that your support you want to reach. If it's 10 pips, fine. If you have seen your weak rejection, mostly you'll be using 10 pips. But if you've not seen your weak rejection, that's when I usually use 20 pips. If you are seeing your weak rejection, mostly you just use 10 pips. So like this now, this trade is already invalid. Price has closed below my weak.
Yeah.
You understand? Are you with me?
Mm-hmm.
Yes, sir. Any question or concern in this?
Right now, no.
Yeah.
I think it's just like us practice.
Yes, now just make use of these websites. Yes, then practice on using your long and short position to, like say, in case you don't know how to use it to get your pips calculation.
Yeah.
Because you need to understand pips. So and also when they are giving you signals to know how many pips is the stop loss, if you are taking signals, then just come here, this position size calculator. Calculate it. You understand?
Yeah.
Mm-hmm. So no more than 10%, or if you want to risk, if you're a risker, 20% is okay. But please, no more than 10%.
Okay. And what of people who open multiple positions?
They know what, like this now, if you have this lot size now, should be they've given you 0.39, almost 0.4. Yeah.
Yeah.
You cannot split this lot size into, like, you cannot use 0.05, 0.05 if you want to open multiple position. 0.05 to get 0.4, you open like almost 8. Because this 0.39 is similar to 0.4, right?
Yes.
It's just 0.01 different here. So you can open like 0.05. If you open 2 times, it will give you 0.1. You understand? If you open 6 times, to give you 0.3. So if you open 8 times, to give you almost 0.4. So now you've opened multiple positions, but you are still risking the same total amount of lot size.
Okay, but like what are profits? Like, wouldn't the profits be the same if you just open one position?
If the profit will be the same, it's just that most people, if they want to close, like if they want to break even their trades now, if the trade is in profit to some extent, they can close some positions.
Okay. Okay. I see, but like coming from you, like, is that something that you would do comfortably? Like,
I do most times. I do when I want to, like, if I do that, if I want to, like, risk cover, if I want to, flip, if I want to flip, or if I'm willing to risk, or, just depend. But sometimes I don't. I don't do it for main account. I only do it for account that I know I want to risk.
okay.
Like, risk very well. I don't do it for an account that I want to, like, I'm growing.
Okay.
Understand? I don't do it for those kind of accounts. I do it for I have what I call flipping accounts. Account that I just want to double or triple the money inside it.
Okay.
I do that a lot.
I have another question, and
Yeah.
I have another question, and my question is about like growing.
Okay.
Say, for instance, now you have your account and maybe you've put 200 there, but
Yeah.
through that 200 to maybe 1,000 or 1,005 or even 2,000. Like, how long do you think it will take you to do it?
How long?
Yes.
You can do that in 2 days. You can do that in a day. You can do that in 1 week. You can do that in 1 month.
Yeah.
There's nothing impossible. There's no limit in trading. There's no time limits.
Yeah.
That is just the thing about Forex. There's no time.
Let's just say that you are not trying to take too many risky trades. It's possible to do it.
Okay. If you want to, if let's say you want to be risking 10% on your account, am I right?
Yes.
Let's say you want to be risking with this 10%. So that means you are willing to risk only $20 on that account, right? So now, how long will it take you to make 1,000? Let's start with $1,000. You start risking only $20. So now you'll be looking for 1 to 3 trades mostly.
Yes.
What does that mean? You'll be looking for trades that can give you $90. You can be looking for trades that can give you $60. You understand? Because if you are willing to risk $20, that means you want to make $60. That is 1 to 3. You understand? So you'll be making $60 on that your account. So day one, you made 260. Day one, you've made 260. 200. Day one, you've made 260. So day two, you have $260. Day two, 0.26. Your lot size, right? 0.26. Another 1 to 3. 0.26, 1 to 3 trades. Making times, that means you are willing to risk, let's say, 0.26 lots. You start $26 on that account. So 26 times 3. Because they are growing the account by 30%.
Yeah.
Sometimes you might see 50. So 26 times 3 will just give you 78. So add 78 to 60. 338. Your account has grown to 338. Calculate again. $33, right? $33.8. $33.8 times 3. You're making 101. Let's say $100. Add to 100 plus 338. 1 plus 338. 439. Your idea, this is day 3.
Yes.
Day 3, you already have an account of 439.
If I'm taking short trades and it's
Short trades, yes. So your third trade, you already have an account of 439. So now you're risking 0.4. $43.
$3.
9 times 3. That will give you $131.
Wow.
So add it to this now. Add it to this plus 439. $570. So now,
already I've moved.
507 as day 4. You're already on 507. So you just need like basically from this calculation, you already need like 8 to 10 trades. You need like 8 good trades to get to $1,000.
Wow. And it's very doable.
If I calculate it very well. Yeah. So you can give yourself 1 month.
1 month.
Just know what you are doing.
Yeah.
I have one of my students that is doing this currently.
Yeah. At least that's my goal, right? I want to see how I want it to be to flip or grow the account to 1,000, and then from there I can create another challenge.
Exactly. You can start with that.
Yeah.
Understand? It's possible.
Okay. At least I know it's doable. It's just making sure I understand the risk, my risk ratio, and then see how I can also minimize loss.
Loss. You just have to use this position size calculator and know what you're doing.
Yeah.
No, for now.
For now.
We're all good, Abby.
Right now, yeah.
So please, anytime you are trading, just follow these risk management, please. You understand? We don't need to follow it back to back. This is what you need to be following back to back. Anytime you are trading, on your own or with signals. You understand? So I don't need to be telling you lot size to use every time. That is why I just taught you this. You understand? Not every time I'll be telling you lot size to use. So are we good?
Yeah, we're good.
Yeah, so for this weekend, complete your candlestick Bible. And next week, we'll be looking at FIB and price pattern. You understand? So I'll not no much assignments. I'll just upload 2 more YouTube videos. You can go back and watch all the YouTube videos again that I have uploaded. I'll upload the last 2 classes today on YouTube. Then you can watch everything. No assignment. The assignment is you. Focus on yourself and study. If you don't study, it's your own. You have passed the stage now that we give you assignment back to back. Right? Because like this now, you know most of the things. You know trends, you know support and resistance. You're practically good. You understand? You're good to analyze chart and make money on your own, which some of you have been doing this week ahead. So you know what you're doing. So there's no point in me giving you assignment back to back. You understand? So now, and I'm not teaching any new topics so far. So practice what I've taught you. Understand? Practice it and use it to do something for yourself this weekend. And next week, continue. Understand? You guys are impressing me so far. I like it. One of my favorite sets this year so far.
Thank you.
So I'll see you guys on Monday.
Thank you.
Yeah.
All right.